Well, first thing we're gonna do is finish chapter 3 handout. And excuse me. Do textbook problem PR 3-1A, which I've also sent out to you guys. And then we're going to do the practice exams, part 1 and 2. And and then tonight, and then I'll send out the exam for chapter 3. I didn't put the chapter here. I'm sorry. Chapter 3 exam will be sent out I'll say by 10 p.m. And it is due on the 29th, I think. Let me check. Friday the 29th. So this is what we're going to do tonight. So we should probably get started. Let me save this before I go further. Okay. I'm going to cheat and peek ahead and see how many I have here. Okay, 3 more or 4 more. That's not too bad. Okay. Well, so I think we ended up on chapter 3, the adjusting entries. I think we went up through, yeah, we got through number 6, and now we're on 7. I know how to count. So anyway, so we'll start on number 7. Okay, now number 7 is about, you have this, but by the way, all of these are on, you know, we're trying to get, the idea for all of these is actually rather simple. It is just basically you're trying to get all the revenues and all the expenses for the year, say 2021, in the same, you know, in the same period, which is a real easy concept. The difficulty comes in that you have some transactions that go over more than one period. They straddle periods. They may go over at the year end, or they might go over for, in this case, 10 years. So the question is, how do you get those revenues and expenses in the right period? And that's really what we're doing. It's a really easy concept, but actually applying it is fairly difficult. So that's why this is, I think this is the harder of the, excuse me, harder of the chapters. Okay. So we have this truck, and we paid $20,000 for it, but it's going to last us for 10 years. So what we're going to do is say, okay, we're not going to expense the whole truck in this year, the year that we bought it. We're going to expense it as it benefits the company. In other words, over the next 10 years, it's going to benefit the company. So we're going to expense it over 10 years. All right. So that is what we're going to do. So question is, how much are we going to expense every year?
2,000.
Yep. Okay, so this is oops. Cost is 20,000 divided by Okay, so ooh. So every year we're going to depreciate $2,000 because it's going to benefit the company over 10 years. Oh, not here. PAZ. Now, making the journal entry is the very morbid oops. E A D. Wish there's a better oh, you can't hear me?
Expense and what?
Let me turn my microphone. Hold on. Blah, blah, blah. Okay, can you hear me now? Your silence would indicate that no, you can't hear me.
He should try unmuting herself. Click on, let me text her. Click on computer audio. Click your computer audio.
Okay, well, I'm gonna, I stopped talking for some crazy. All right. But can the rest of you guys hear me okay, or am I too
I
quiet?
can hear you.
Okay.
What is the AD? I know DE is depreciation expense. What is the AD?
Accumulated depreciation.
Oh, okay.
Yeah, so the DE, yeah, you're right, depreciation expense. And AD is,
Accumulated depreciation.
yeah.
Okay.
And the nice thing about these adjusting entries, I think we talked about this last time, is that they always have either an expense or a revenue. And the expenses are always debits. So if you have an expense, it's a debit. And whatever the account is on the other side is going to be, you know, credit. And they always have either one or the other. So the deficit credit part is actually a little easier than I think the regular entry. Cord down here. And so this is a standard entry that you'll always do for this. And so here's what would happen is for the next 10 years, you'd make this same entry. Next year, you'd make exactly the same entry. Year after that, exactly the same entry. Okay, and this is how this would be shown on the balance sheet. What is that, equipment? Equipment 20,000. Shown like this. And so this would be, this is how this would be shown on the,
So the net is 1,800.
yep. 18,000.
18,000, yeah.
So this is how this would be shown, and we'd be telling the readers, look, this equipment is really, this is what we have left in this equipment, 18,000. Every year we're gonna knock that
So
down.
that will be for the first year, right?
Exactly. And by the way, this is what this would look like in the second year. In the second year, this would be 4,000, this would be 16,000.
16 in that order. Okay.
Exactly, keep going down until you get to 10 years where it'd be 20,000, and 20,000 would be worth zero.
Okay.
Let me get rid of this. It's not confusing. But yeah, so this is the oops. So the equipment we showing on the books as worth 18,000. And every year it'll go down by 2. Okay. Didn't I talk about this one? What did I do here? I did not. I thought I'd already gone over. Oh, who's teaching this lousy class? Okay, so this is the yeah, so this is whether this would be shown on the balance sheet. Now, you might say, and this would not be wrong thinking at all, but look, why don't we just take it right out of the equipment, right? Why don't we just, you know, okay, we have a debit of 20,000 equipment. Why don't we just credit the equipment for 2,000 and reduce the amount of the equipment, right? I mean, that's basically what we're doing down here. Why do we even have this, you know, accumulated depreciation in the first place? I'll show you. I think we'll do the next one, then I'll kind of show you why we do it. So this will be, yeah, this will be a little bit. I'll go over a little bit why we actually have this accumulated depreciation account. There is a reason for it, but it may not be as obvious as it when you first look at it. So anyway, we have this account. It's like what they call a contra account. This goes against the this goes against the equipment. It reduces it. Okay, well, let's do another one. I'll be quiet and see if you guys.
So there is nothing for liability and.
Well, there would be stuff in here, but this is just the one that we would be looking at for this.
Oh, okay.
You know what I mean? There'd definitely be other stuff in there. You know, this would just be from this stuff up here.
Okay.
Yeah, and there'd be cash and all kind, you know, a bunch of other stuff. Okay, let's go down here and see if you can figure out how much would it be.
A machine was purchased for 12,000 cash on January 1st at the time of transaction following the entry. And when, for 5 years. So it's going to be 12 divided by 5. So that's going to be 6,000.
Listen, now
12,000 divided by 5. Oh, 2,400.
Yep.
So it's going to be 12,000 divided by 5 years, which will give us the net as 2,400. And then, so this is 2,400. And so I will go for depreciation expense, which is debit for 2,400, and accumulated depreciation, which is credit for 2,400. Depreciation expense.
Yeah, so this would be for, yeah, so for over 5 years, do a pointer here. So this thing's going to last us for 5 years. So every year we're going to take off a little bit because we're going to spread it out over 5 years. So the 12,000 is really isn't just for this year. It's going to benefit the company for 5 years. So every year I'm going to take out 2,400.
2,400. So assets will be equipment. Assets will be machine, okay, equipment. Equipment for 1,200, 12,000 minus accumulated depreciation. 2,400. So my nets will be 2, 3. 12, 1, 2, 3 minus 2,400, 9,600.
Yeah, I think so. Yeah, so this is so the equipment's on the books for 12,000. So on the balance sheet, yeah, and there would be all kinds of assets and liabilities and there's equity. But just for this equipment, we would have let's see. $12,000.
$2,400.
Yep. Sorry about that.
And
Thing down. Where is it? Oh no, my phone just went off and I can't find it. Oh, there. Okay. Yeah, so this was worth 9,600, you said?
that'll be 9,600.
Yep. And so this is what they would show on their books for the value of that equipment. And again, you might say, well, why don't we just, why don't we just change this to 9,600? Why do we even have this account here? And we'll show you why down here. Sort of like this. So let's see that we have. Okay, and we have two pieces of equipment. We have equipment. Okay, so we have these two pieces of equipment, and here are the costs of them. That's it. Yeah. Okay. So equipment A is 125,000. Equipment B is 6,000. Unit depreciation for A is, whoops. Okay, so down here we'd have what they call the book value. Or carry value, same thing. And you'll notice that for both of these, it's 5,000. So the carry value for both of these is $5,000. Now notice if you just showed this on the books, and not the rest of this, you'd think that these were both about the same. Okay, looking at these two, oops. I'm gonna move this stuff up here. So we have equipment A, equipment B. Which one is older, most likely?
A.
Yep. Why?
Because the value has depreciated so much than B.
Exactly. Almost this whole thing's depreciated. Whereas B, well, it's the same total value. If you look at it, relative to 6,000, it's only gone down a little bit. It's only 1,000, but it's this is almost the whole thing is down. So here's the thing. This is equipment A is a much older piece of equipment, and it's probably going to have to be replaced fairly soon, right? I mean, it looks like it's almost all the way down.
The value, the depreciation value is bigger than the book value.
Exactly. It's going to be, that this one's probably going to have to be replaced. And looking at these two machines, which machine is probably a bigger, more expensive machine, A or B? A. So if you looked at these two pieces of equipment, while they might look the same, they could be very different actually in, if you're a manager thinking about, okay, oh my gosh, I got to replace this big expensive piece of machinery pretty quickly. Whereas if you're looking at a machine B, you might say, okay, this is, relatively smaller and probably doesn't need to be replaced for a while. It looks like it's, it's got a few more years left on it at least. So you get more information by having this accumulated depreciation. Yeah, it messes things up. It'd be a whole lot easier just to keep writing it down until you get to these, it'd be easier to do. But the idea is that it gives people a lot more information. And excuse me, that's what it is in accounting. That's what we want to do. We want to give people who are in management, people who make decisions, as much information as possible. So that's why we have that accumulated depreciation account. There's absolutely nothing wrong with thinking about it like, well, why don't we just take it right out of the equipment? Why don't we just write down the equipment as time goes on? And the reason we don't do that is because of this. There's a little bit more information for people who are actually making decisions. Okay. Supplies. This one is left to the end because I think this is the more difficult of all of them. And by the way, the next chapter we cover is kind of based on this idea. It's going to be on inventory. So anyway, we have beginning inventory of office supplies is 100. $400 of supplies were purchased. At the end of the year, only 700 of the office supplies was left.
70, only 70.
How much?
70, not 700.
Oh, I say 700. I'm sorry. I was exaggerating. I do that. All right. So the question is, how much of the office supplies were used?
330. 430.
That's a question I don't know the answer to. Yeah. Yep. Yep. So it looked like this. And by the way, we're going to actually hit. This is the same idea we're going to have for inventory when we get into the inventory chapter. So we have beginning
100.
more. And so this will give us what we would call supplies available. In other words, how much of the supplies could have we used? So the most supplies we could have used is 500. Oops, no, do that. I'll do this. So this is supplies that are available. So the most we could have used is 500. Now the ending inventory, if you think about it, these are what were not used. So what was not used was 70. So we're going to subtract that out. Okay, of the 500, 70 was not used. The rest of these must have been used. Scratch that. Let me change this. I'm jumping a chapter ahead. Okay, so $430. So this would be our oops. So how much of the supplies we used? We used 430. Okay, so this is kind of what this is going to look like here. I think I should do this. Okay, well, let's take let's jump back here a little bit and say, okay, is this going to be a revenue or an expense?
Which one?
Yeah, which one's it going to be? Revenue or expense? What do you think?
For which one?
Oh, for this one we're doing the supplies.
Supplies is revenue.
Now, remember,
We bought it, so we expense. It's expense.
is good. Yeah, exactly. We're paying for it. An expense is when we pay for it. Revenue is when money comes to us. So
Okay.
this is money going out. We're buying supplies. So this will be an expense. And the great thing about expenses,
It's always debits.
yep. So this will be, sorry about this. So this will be supplies expense.
Which is debits.
For 430. And again, expenses Pause debits. Okay, so this will be so
Supplies expense.
supplies expense is going to be a debit for 430. It's the same as 430 up there. Okay, now the supplies account. The supplies account is going to look like this. The supplies account had started out with 100 in it. Then we bought another 400 of supplies. And so we had a total of 500 sitting in there. Now, notice if we don't do something, people are going to think that there's 500 of supplies sitting in that account. And there's not, right?
Mhm.
So we have to reduce these supplies. So this is supplies. Why did I do that? It's an asset going down. So we're going to credit it. Now, again, expenses are debits. You knew whatever this account was going to be, it had to be credited, but it's credited because it's a asset going down. And like we did in chapter 4, we say, okay, 500 on one side, 430. So what's left over is 70. Now, here's the important part about this. You make the journal entry for what was used, not the ending amount. The ending amount will just come out to be whatever it is. You know, in this case, it's 70, up here. But you make it for what was used. Not what the ending balance is in the account. Again, the ending balance will come out to be what, whatever it's supposed to be. But you always make the journal entry for what was used, what you have to take out of it. So we have to take out 430 out of the supplies account to get it down to 70.
Mm-hmm.
So that's what that would look like.
Yeah.
What's on that thing? This is what I think this is the more difficult of all of these. So there's just a lot to it. You got to jump through hoops to get to the numbers, and then you got to kind of think about stuff down here. And we're using the same wacky 400-year-old shorthand that to date no one's improved upon. So we're stuck with it until someone comes up with something. I encourage you guys, if you do come up with something, the whole world's going to be interested. Okay. Let's go to the last one. And I think I'll be quiet and see if you guys can figure this one out.
Okay. The beginning inventory was inventory. The beginning. Inventory was 30. And then purchased an additional goods, supplies, purchase was 140. Oh, the purchase was 140. So it's going to be 170. It's gone. We don't see the question.
It's gone.
Oh, now it's back here. At the end of the yearly 50.
We just up here. Share.
At the end of the yearly 50 of office supplies.
Okay.
Into 50. How much supplies was used? 120. How much supply was used? 120 was used. Okay. Okay.
Away for 1 minute. I got a dog barking at somebody. And by the way, the dog looks just like that. Okay, so right now I'm going to teach you guys how to be lazy and cut and paste. It's an important skill to have.
Okay. 140. 170.
Was that 120?
Yes.
Okay, so she came up with 120 as the and so the 170 was the total amount we could have used. But if we have ending supplies, those supplies must not have been used yet. Right, those supplies must have, not been used. So how much was used? The rest of them, 120 was used. So same thing as before, supplies expense.
Which is debits.
Yep, and the nice thing about supplies expense, and by the way, it's only for the used amount. You don't make it for the 50, you make it for the 120. So whenever you run across an expense, you say yippee. Well, you don't say yippee. You say, okay, I know that that's a debit. So whatever goes on the other side is going to be credit. In this case, it's supplies. It's going to be an asset going down. And so we had saying in the account, we had 30 and about 140. So this is before we made this adjusting entry. It looked like this. We had supplies of 170 in the account. Now we really didn't have 170 left in that account. It was down to 50 at that point. But so that's what we're doing. So we're going to expense 120 of it. And that will also be over here. And so the ending amount is 50. Now, again, while that is the ending amount, that's not what we make the journal entry for. So these would be the ending amounts of those accounts, but we make it for what was used. Not what the ending inventory is. So how much of the inventory, or how much of the supplies, how much of the supplies were used? That's what you make the journal entry for. The you know, this $50 will shake out at the bottom. Question on that? I think that's it for this handout, isn't it? Yep. All right. More questions? Let's go ahead and save it then. I'm going to make a decision here. I'm going to skip the textbook problem. We won't do that one. We'll jump into the practice exams. So I think what I'm going to do is I'm going to send out the first practice exam. Oh, by the way, I got to add the practice exam amount, extra credit on your exams. I'm having a hard time doing it. I used to do it, be able to put it separately in Blackboard. I can't do that for some reason. It's not taking it. I know I've done it before, but people are telling me now that it can't be done, and I can't figure it out. So long story short, I'm just going to add it onto your exam amount. So there's going to be an extra amount put on your exams for the extra credit from chapters 1 and 2. Chapter 4 didn't have any extra credit, but chapters 1 and 2 did, and so that should be on there. By tomorrow, I'll have that put on. But again, it's not going to be separate. You're not going to be able to see it separately. It's just going to be included in your grade. It'll work. I mean, it works out exactly the same. It's nice to see it separately, though, but that's not going to happen. Okay, so what I'm going to do next, I'm going to send out the chapter 1 practice exam, part 1. I don't think there's any. I don't think any information can come up, but I just don't want to change it. Okay, I just sent out the chapter 1 practice exam part 1. That's the multiple choice one, and I'll put up the poll for us to put the answers into. So each one, and you get extra credit points. Whoever participates in the poll gets extra credit points. This practice exam, though, is going to be a little bit different, and it's going to be different for a good reason, in that I'm going to reduce the correct answers needed for the extra credit points. There's 10 questions. And so what I'm going to do is say, if you guys get 8 of them correct, you're going to get all the points. It's a tough chapter. So, and the correct answers are as a group, not individually.
I can see.
The correct answer. So if you get 4 of them correct,
I can't even see the question.
if you get 6 of them correct, plus 3. And if you get 8 of them correct, 8 of the 10, you'll get all of the extra credit points. So this will be plus 2 extra credit. 3. Yeah, plus 4. Okay, so let me.
Are we doing chapter 3 practice exam? Because that
Oh,
was,
it is this one.
Yes,
That's
yes. Yeah, so we'll do this one. I think what we'll do, maybe when you're done with it, you can take a break and then we'll go over it. Let's see.
So what do we put the answers?
That's an excellent question. I'm gonna open up a poll.
Oh, there we go.
Yeah, so you'll put your answers in the poll and you know, A, B, C, or D. And yeah, so that'll be and again, as a class, if you get 8 out of 10, you're gonna get you get all the extra credit points. Those will be added on to your test, and then but they'll be added on. They won't be added on separately. They'll be added on top of whatever your grade is. So anyway, when you look at your test
Okay,
after tomorrow, it'll be if you were participating in the polls before, it'll be they'll be added in on top of your test grade. By the way, these are also, if you didn't get the email, these are also in Blackboard. Okay, I just so you guys know, this is this is also available though in Blackboard, and it should be in your email too. Multiple choice questions. Is anyone still working on the practice exam?
Yeah.
Okay.
Are we doing the part 2 now? Are we doing the part 2 now or later? Professor.
I'm sorry. Um, all right, so these were the all right, first one. B is correct. So far, so good. Number 2, B, is the weird one that's liability. Oops. Strange. It's a strange name for account. It's not because it says revenue, but it's really not a revenue at all. Ooh, we have a tie for number 3. It is B. I'll give you guys that one. So yeah, decreased liability. So we no longer owe people. We no longer owe people, and at that point it becomes revenues. We have regular revenue. So a decrease in liability, we've worked off whatever amount we're supposed to. Okay, 4 is B. Rent expense and prepaid rent. All right, 5. Five is D. These are tough. Yeah, so this would be accounts receivable and revenue. So we wouldn't have the accounts receivable and we wouldn't have the revenue, so they'd both be understated. Six, C is correct. 7 is missing. Okay, 7. Okay. 7 is D, that is correct. 8 is D. This one's tricky. because this is the monthly. So how much is the monthly depreciation? Well, 2,400 would be for the year, but for the month, you divide that by 12, you get 200. Nine is C. This is one of the more difficult ones, I thought. Number 10. Debit accounts receivable. You got a tie over here. We give you the tie, so you guys got it. You only missed 4 and 5. Very good. Well, they're tough. Let me download that before we do anything. Okay, we just got the +4 added onto your. +4 added onto your exam, chapter 3 exam. Okay, save that. Oh, already got that. All right. Okay, well, one last thing tonight. Practice exam part 2. Starting out with the most difficult one first, so that if we get tired, we'll get this one out of the way. Okay, so this one kind of is like number 9 and 10 on the handout. Oops, I didn't mean to do that. You keep putting how much the size were used. I think it's actually should be was, isn't it? How much was used? The single amount. Anyway, I'll leave it like that. It sounds better with were, but anyway. So how much of those supplies did they use? Anyone?
What are we doing?
We're doing the chapter 3 practice exam part 2.
Oh, I thought you said we're having a break, or we finished this and that's it. Okay. They used beginning was 210, and they added 550, 067, and we took, so 560, they used 560.
I think so.
560 at the end of the year, only 200, yeah. Yeah, 560. Yeah, they use 560.
I think that is right, yeah. So supplies available would have been 760.
Yeah, 760 minus 200.
And evening supplies were not used. So we're gonna subtract those out. And that will leave what supplies used were. $567. Okay,
5. So it's 560, right?
Yep.
Okay.
so what would the journal entry be?
Supplies expense.
Yep.
That would be debit for 560. And supplies asset reduce.
Oops, what am I doing here?
560, and then assets reduced for 560 credits.
Now, the thing you do when you take the test, go through and get all your answers in, and then you can just go through and check and make sure that all the expenses are debits. Right. So as you get done with that, just go back and check and to see, okay, the expenses should all be debits. So, go back and see that they are.
Okay.
Okay.
12 on September 1st, a 1-year insurance policy was purchased of 1.5. On September, the entire insurance policy was recorded as debit to prepaid. So September, October, November, December.
Okay, so how much is it per month?
Per month will be, give me 1 second. It's going to be 1,500 divided by 12. It's going to be 125.
Yep.
A month is 125. 125 times 4. Times 4 will be 500. Okay, so 500 is used.
Yeah,
So-
now notice that they bought this thing in September. This is.
Yeah, they bought it September 4th. So we count September, October, November, December, 4 months.
Exactly.
120.
And we bought it on the 1st of the month.
Yeah.
If we bought it on the last day of the month, bought on the 30th or whatever, we wouldn't count that month. Usually the cutoff is about halfway through, usually on the 15th, they'll say there's a cutoff.
Mhm.
But yeah, so when people, if people get this one wrong, they almost always get it wrong because of the counting of the months. And they almost always count it, have one too few. They'll say, oh, but in September, so we have October, November, December. Well, it depends when in September you bought it.
Okay, so we're going to debit prepaid accounts. Right?
Is this going to be a revenue or an expense?
It's going to be an expense.
So expenses are always,
Debits.
Mm.
So do prepaid accounts and insurance accounts. Oh,
probably insurance expense will be the expense account. What is that, 500? I think it's 500.
So insurance expense or debit for 500. And then prepaid accounts or credit.
So it has to be either an expense or revenue. If it's money going out, it's an
And
expense.
then it's going to be credits. Yeah.
And the prepaid is gonna go down.
To 1,000.
Yep, now, but the journal entry is going to be for what was used. Just remember that. So this is what was used of the insurance. So the prepaid insurance will be the credit for 500. And this will be reducing that asset.
Hmm.
And again, whenever you have an expense, it's a debit. I say always, 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 but I mean, unless there's a error made or something, it's going to be a debit.
So are we doing just one account or two?
Well, the two, insurance expense and then prepaid insurance.
So we put the 500, 500. What happens to the 1,000?
If we were to do a T account for it, we would have, that was what would be left.
Okay.
So for instance, there's 1,500 in that account would be a debit.
Mhm.
Subtract out this 500 and 1,000 would be left. But we actually don't have to make a journal entry for that 1,000. It's when you take out the 500, it'll automatically go down to 1,000.
Okay.
Yeah. But no, it is confusing. And like I say, this is a tough chapter. This is one of the toughest chapters in all of accounting, really. I used to do auditing, and I think they call these closing entries sometimes, adjusting entries. It's not uncommon to see people who've done this for 30 years making mistakes. So these are tough. And I think I told you guys before that there was
It is tough.
that I did do an audit where they put an adjusting entry in and they took it back out. They did that 6 times. They, oh, it's wrong. And they, yeah, going back and forth.
Paid wages totally.
Okay, so
Wages. We call 1,500 for 5
space here.
days a week. They are paid every Friday. This is Matthew.
Okay, so we owe them their wages.
We owe them.
And it's $1,500 for a 5-day week. So how much is it per day?
So per day would be 300. 300, I think.
Yep. So wages per week is 1,500. Oops. This occurred to me. I got the same 1,500 up in this one too. I don't know why.
It's 300.
Okay, divided by 5 days. Okay, so $300 per day
300.
is used. Now the question is, how many days do we owe them for?
They're paid Monday through Friday.
And the year end is on,
It's on Wednesday.
well, how many days do we owe them?
3 days.
Yep.
Because, yeah.
Exactly. So this would be
It's going to be 3,900.
yep. So Monday, Tuesday, not Thursday. But I know the days of the week. All right. So this would be, the 3 days. We own for 3 days. So we would take. Oops, disappeared. You said 900.
Yes.
Okay, so this was okay, so we owe them for 3 days. Is this going to be an expense?
It is an expense because it's going out.
Yep. And expenses are always
Debits.
debits. And we use 900 of insurance, but not insurance, wages.
Wages.
Okay, and again, we have an expense. Let me on the other side. This is a little bit tricky. It's a little bit tricky because it's employees, it's people inside the company. But now, does the company owe them more or less now?
Owe them more.
Okay, so what is it when you owe somebody? What kind of account?
It's going to payable.
Yep. Yeah, probably wages payable. If you put accounts payable, that's fine. For 900, and that is a
Credit.
yep, and it's gonna be a liability going up. We owe them $900 more. And in case you're wondering, so Monday through Wednesday will be in 2021.
Yes.
Thursday and Friday will be in the next year.
Yeah.
Yeah. So so we're just saying, okay, how much of it belongs in this year? Well, Monday through Wednesday. Thursday, Friday, those are in 2022.
Mm-hmm.
Okay. Uh, 16.
A machine was purchased for 16,000. It was used for 5 years and then scrapped. So it's going to be 16,000 divided by 5, 320 per year.
Those will be the depreciation expense.
16,000. That's going to be 3,500. Hold on.
Oh, yeah.
It's going to be 3,200.
Yep. So every year, 3,200 will be
Depreciated.
And again, the morbid thing here is DE.
DE expense, which is debit, 380 accumulated depreciation, which is credit.
Yeah, so this will be depreciation expense. Oh, I gotta put let's put a dollar sign, $dollars in there. So 3,200. And again, expenses.
Debits.
Oh, it was debit, yep. Security depreciation is a contract account. You don't need to put this in. But it goes against the whatever's in the machine account or the equipment account. Unearned revenue totaling 2810 have been earned. Okay, do we have a
And revenue is
expense account?
unearned is earned revenue is, you did not earn it.
Correct.
So,
Unearned revenue really isn't a revenue at all. It's a liability. Kind of a bad name for it, but the world's not perfect. So yeah, so unearned revenue is a liability. Now it says that we've earned 2810 though. So are we talking about a revenue or an expense here?
it says a revenue because it has been earned.
Good. So it's revenue.
Yeah.
And revenues are nice because
They earned.
revenues are nice because we know that they are always going to be credits. No, I'm having a hard time finding it here. There we go. So whenever you see a revenue, make sure there's a credit. You get done with your test, go back and look over it, make sure all the revenues are credits. Oops. Now, what goes on the other side?
Unearned revenue or accounts receivable.
No, it's actually just the opposite of accounts receivable. They already paid us. So they paid us ahead of time. We've already received it.
So
But
unearned revenue.
yeah, and this is a liability and it's going down. We no longer owe them. So we did missing letters. Word doesn't like my new shortening of words. So there's a liability going down. We no longer owe them for 2810. It doesn't say how much we owe. This might be all of it for, you can't tell. But so we've done the work for 2810. We've earned 2810 of this unearned revenues. Now it's earned revenue. And by the way, you can feel free to put that in there. And sometimes you'll see places even say, call it earned revenue or revenue earned. So by definition, revenue to be called revenue, it's got to be earned. But you can put that in there if you want. Nothing wrong with it.
So Professor, you said the unearned revenue liability goes down, but it's all revenues are always a credit. Is that what you said?
Yes. So this is I don't think I put it in this one. I don't know what I was thinking. Our little the table thing. Wow, this thing. I don't know why I didn't put it in there. It should be in there. Yeah, so the unearned revenue is going to be this. So it's a liability, and it's going to go down with a debit. So it's going down. So we no longer owe for 2810. Our revenues are always credits. So those will be, the credit amount. So yeah, unearned revenue is a liability, and it's going down. You can also see it on this one too.
Okay.
Somewhere here, there. So it's going to decrease with the debit. And again, and then that's what you want, unearned revenue. You want it to be earned. That's kind of the whole point of it, is that you can earn it. You don't want to have to pay it back. You don't want to go ahead and make a sale and then all of a sudden you have to turn around and hand them their money back. So anyway, all right. Revenues. That's a nice gift. Revenues of 1,300 is earned but not billed at the end of the year. Okay, I'm not going to insult your intelligence to say whether we have a revenue or an expense here. We have a revenue, obviously.
Revenue is always credit.
Yep. So we know this right from the start. And again, you can say it's earned. That's fine. Yeah, you guys put in parentheses, you can see revenue earned revenue is fine too. So. Again, by definition, you can't call it revenue unless it is earned.
Mm,
Kind of nitpicky. So revenues are always credits. Okay, now the question is, what goes on the other side? So we've earned the money. We haven't sent out the bill yet, but somebody owes us money. What kind of account do we use if somebody owes us money?
Receivable.
Yep. It's the accounts receivable. It's an asset and it's going up. People owe us money and they're going to pay us in cash. That's why we count it as an asset. So it's going to be 1,300. And that's that. That's it. That's the toughest test we're going to have. Toughest chapter. And if it still doesn't make sense, you know, like I say, it's one of those things. It can be difficult at all levels. But then you go, once you're done with it though, go back and make sure that all the revenues are credits and that all the expenses are
Debits.
debits. And, you know, and at least, you know, like say, at least the debits and credits will be right. Maybe you get a wrong account or something that's -1. That's not the big deal. But something funny. Oh, I see what I did. But yeah, but you can go through and just make sure that they're, you know, expenses, debits, revenues, credits. And I will send that exam out by it should be out by 10 o'clock tonight. I'm going to take a look at it real quick just to make sure everything's okay with it. But any questions on this? I know it's a lot. It's a lot of kooky accounts. And quite honestly, a lot of times in accounting, you'll have people that are basically focused on one type of these accounts. You know, there'll be someone who's taking care of the depreciation accounts. Usually there's somebody who takes care of the payables, you know, to employees and all this other stuff. A lot of times the people in charge of expenses of supplies expense. People who handle the supplies will be the ones that are in charge of that. So a lot of times, even though these are maybe a little more confusing, they're also, if you did this every day, you know, this wouldn't be that big of a deal. And I learned that in accounting. There's things that I did. There's things called pensions that we had to do accounting for that just made no sense to me. And I worked at a company that had a bunch of pensions, and I was like, "Oh man, this is so easy." Well, it's easy if you do it, you know, 8 hours a day. Yeah, it is easy. If you do it for, you know, 18 minutes in a class, it's hard. But you know, so anyway, any questions on that? Okay. Well, that's it. Hey, look at that. We're early. Yay.
Yay.
That's a class enjoyed. One that's short. Everybody enjoys a short class. Who won? Okay, so I'll put a. So here's what I'm gonna. Let me pull up the thing. What are we gonna enter here? Let me share this. Oops. Okay, so I am going to put to submit. Let me change the font here. Regular. Okay, so there's going to be submit. You're going to have the chapter 3 handout. The chapter 3 practice exam part 2 only. Why part 1 we get the extra credit points for? That one's, you know, that one, whoever's participated, they already have theirs. So only this last one that we just did. This is the only one that you're going to put in. And then also the chapter 3 exam, which again is due on All these actually are gonna be due on Friday. October 29th. And we'll be done with the hardest chapter in the course. Any question on that? Okay, so this is what you're gonna, I'm gonna put the submit stuff in for these right when I get off the air here. Any questions? Don't say anything. Don't say anything. Oh, God, don't say anything. All right, so we'll go ahead and I'll see you guys in a week, and I'll send out the exam by like 10 o'clock. It might be a little earlier than that, but by 10 o'clock, I'll send out the exam, and I'll put the drop in there for those Chapter 3 handout, Chapter 3 practice exam part 2, and then the exam, Chapter 3 exam. Okay, guys. Have a good-
Okay, thank you.
Thank you.
Professor,
Thank you.
Yeah.
sorry, I have a personal question.